If you're looking for all these, when you're swimming in an ocean of money with a lot of sharks here, the question is, what do you do as decision makers? And I speak a little bit provocatively on the development thing. On one hand, in our risk expertise, it's core, value add, opportunistic, and development. Nowadays, I think development becomes much more super core product if you can deal with it. Again, from the risk return attractiveness, you get a little bit crazy. Explaining your chairman of the board, now starting developments. On the other hand, if you look 3 or 5 years in the non-existing crystal ball, I think some of your invested money should be placed in developments. Maybe more mixed use rather than a purely fantastic super banking tower, wherever. But I think this is again where you should also bear in mind that development can be one of your little solution on swimming with all the sharks around and asking for higher prices. This is again where I see, beside all the textbooks, don't get me wrong, where we have to deal more and get more involved in all these development things. I see that there is obviously most of the companies, meanwhile, no education or culture or knowledge on these things, for sure. But I think this is again where we should bear in mind that this could be part of the diversification effect within an ocean of money from Mr. Draghi.
When it comes to retail developments, brand new shopping centers. I mean, Union have, as probably together with Commerz Real, the largest share of retail in the whole portfolio. I think your retail share should be around 30%, if I'm correctly informed. Commerz Real was moving between 25 and 30%, and others are in the area of 15%, and they want to do more retail business here. But when I look at the development market at the moment in Germany for shopping centers, I think we have a very mature market. There are hundreds of shopping centers. There are only a few cities which really need another one, a new one. Then we are a sophisticated economy with high land prices, strong rights for tenants on existing sites, strong ownership rights. It will be very expensive to get access to a site and to develop it. We will have high construction prices. Our service providers are well paid. Our legal advisors are well paid. So it will be expensive to build a new scheme from scratch. Plus we have planning restrictions, which is the most rigorous in the world. We are not allowed to build any shopping center outside of the cities. And it all has to happen in the city, which means you have complex sites and, as I said, very high build cost. And then I see the occupier market, with retailers being hit by the internet, where about 15 to 20% of the sales will be made online in the long run. So I see limited rental growth at the moment. There is rental growth in Germany. It's a very stable economy, but I don't see the rental growth you need in order to justify the investment in shopping center development.
There's one comment on this. We see at the moment definitely no new major developments of shopping centers in Germany. It has virtually stopped. And we have grown up our portfolio in the years when there were still developments possible, like Essen, Limbecker Platz, or these types of assets together with ECE, or in former years when they still existed, MFI. But that has, the market is mature, and we have seen openings of shopping centers. I don't mention what you know, which ones, where there were opened brand new shopping centers and no frequency. Until today, so we shouldn't blame our partners here. That really shocked us. I think many investors, and we thought about, that is a wake-up call, and maybe it's a question of saturation or the change of consumer requirements or what else, but. We prefer today to have shopping centers that are already in operation, at least for 1 or 2 or 3 years, and deliver the results. And we can discuss about rent to sales ratios and weak areas, strong areas. So, but going into a development JV for a new shopping center. It's not on our table these days.
I think on a single asset basis that might make sense. So a case-by-case analysis, but it won't be the next wave. So we just spoke about very low yields in the market, and then it's a natural move to think about, well, let's build new assets, we have more supply. But I think this is where the shopping center sector will function differently from other sectors. And it takes ages, by the way, to get a planning consent and to get a scheme built in Germany. That won't be possible to serve that demand at the moment. So I think yields will remain where they are. Yeah. And what is fascinating is certainly redevelopment or repositioning, because many of the schemes were built between 1990 and, let's say, 2006, 2007, maybe 2008. And so there will be a wave of assets which will see a light refurbishment now, and then there will be a more material refurbishment, or call it redevelopment. And here you can see that we have just seen in Ruhrpark the first 150 million investment of Unibail-Rodamco to redevelop a really established site, fully redevelop. I had read that it should have been the biggest redevelopment of an existing shopping center in Germany. For now. So, and this is when you look at the market, you can do fascinating things with established sites. I think that will rather be the next thing to do, to reposition gradually established shopping centers. Okay.
Unibail has won this centerpiece of the Hafen City here in Hamburg, and they will get approval for doubling the sales area from 40,000 to 80,000. The city of Hamburg has 300,000, and they add another 80,000 here. That will be a very interesting experiment.
And I hope that
the question, does it work, and what will happen to the city? Very, very interesting.